SharePrices.com.au studios. I'm CJ Dore with some more stock market education, and we're going to look now at continuous bar chart patterns. Now in particular, let's have a look at something called a wedge. Now we've got two examples. Now we know what a wedge is and what it looks like, but let's find it in a bar chart here on SharePrices.com.au. What we notice is a lot of price activity, a lot of red and green, a lot of a waving pattern, ups and downs, highs and lows, big high in the middle, then comes up to new price territory in the top right hand corner. But where is our wedge? Let's have a look, and here it is. Now this one is a descending wedge. Think of a descending wedge, a descent, like on a flight, up from 30,000 feet, descending back down to the runway. Now in this case, the top line and the bottom line are both pointing down. So what does it mean? It represents that the top line shows the highest highs keep getting lower and points that down. The lowest lows keep getting lower, and that points that line down as well. Then eventually you can see we have a breakout, and that's another video you can watch as well on breakouts. And then it goes up. So the trend is broken. It's out of the wedge. It's broken that trend of things constantly moving down, down, down as far as the highs and the lows go. So that is our descending wedge. Now let's have a look at an ascending wedge. So think of the ascent like mountain climbing, from the base camp, the ascent up to the summit. And here we go. Again, lots of price activity, greens and reds, big high in the middle, falls away slightly, but gets some sort of new price territory and some clarity here with a few greens. Now let's have a look at our wedge, and here's the ascending wedge. Both lines are heading up or ascending. So this time it represents that the highs on the top line keep getting higher and the lows keep getting higher. So there's really good support there. But eventually it comes out of the end of the wedge and it's a breakout. Remember, another video you can watch on the breakout as well. And it starts to come down and eventually makes its home around about here. So there's two examples of the wedge. Descending wedge, both lines pointing down. Ascending wedge, both lines pointing up. So a good example of two different types of wedges there, part of our continuous bar chart patterns. Go to SharePrices.com.au, apply a bar chart to something you own and see if you can spot those highs and lows represented of upward or downward movement, depending if it's ascending or descending. I'm CJ Dore with some more stock market education.